Back with another attempt on documenting my journey. Last year, I attempted to document my journey, and I think I failed within the first like 3 days. Just you know, life got ahead of me. Obviously, I'm not a professional trader. I don't do this for for a living yet. So it is a little bit challenging trying to balance work and life and also making videos. But uh, kind of similar to last time. I just want to preface that I'm not really doing this for like fame or anything or money. The videos at least. I'm obviously trading for money, but the videos I'm not doing for anything like that. Um, I just want to hold myself accountable, and I think this is the way to do it. You know, uh, Recapping my trades, documenting it, things of that nature. I think goes a long way. Being able to explain why I took a trade, um, it helps me look for only good trades so I can explain it, right? And it also helps me stay patient because I felt like I've had an okay year trading, a lot of down months, a lot of great months, and a lot of the when I would have a bad month, I would look back in my journal and I would notice that man, like a lot of these losses could have been avoided. I felt myself tilting a lot after taking a loss mentally. I would go into a mode where I would just start taking random trades, right? And obviously, if anyone if anyone's been a trader, right, they know that feeling where you kind of just get tunnel vision, start taking random shitty trades, and then after you blow your account, you look back at the trades that you took, and you were like, "What the hell? What was I doing?" Right? So I'm trying to minimize that, and I think making recaps, documenting my journey will help me with that. So yeah, I hope you enjoy. Uh, and just a little, uh, you know, uh, recap on my strategy. My strategy hasn't changed too much since last year. I did revamp it a little bit to help with my psychology, my mental. I uh, I I felt like I was mentally going insane, right? When I would put limits at my levels and just kind of hope for the best instead of waiting for some type of confirmation or reaction or anything like that. I would just try to top tick or bottom tick everything, and sometimes, if I'm being honest, it would work. I would get these crazy risk to reward trades where yeah, like sure, it looks cool for Twitter, right? Like oh my god, like I just used a 5 point stop on NQ and ran for 50 points, right? But that didn't happen too often. That happened maybe like once or twice every 10 trades, right? So what do you think's happening the other 8 to 9 times? What's happening is that I would put my limits at these levels that I trust and that I put I did my own due diligence at. And what would happen is price would either just run through it or it would react a little bit and still run through it, sweep through it, right? And now I'm taking a lot of drawdown. And I felt myself whenever I was in drawdown, not that my risk was too heavy, but mentally it was taxing because I felt like I was in drawdown a lot. Remember, right? If I'm not top ticking or bottom ticking, the 80% of the time, it's just running through my levels first and then going wherever it needs to go. The problem would be that my stop would be too small, and price would sweep me out entirely. And and yeah, and now I'm starting the day off with a loss when 2 minutes later, price would go the way I want to go. And uh, I just felt myself trying to catch these home run trades, right? I was trying to catch these 4 to 5 to 6 R trades for literally no reason. I would watch some of these trades go for 2 to 3 R. I'm up like $1,000, and then just all comes all the way back down and take me out, or break even or whatever. And it's just frustrating. It's mentally taxing, especially when I got a full time job. I got a family. Like I got things going on, right? And the last thing I need is to be waiting for however long for a trade to go, you know, six, for 5, 6, 7 R, right? Um, and for that to only happen 20% of the time. It's frustrating. So what I did was uh, I waited for confirmation at my levels, and I'll get into that when I showed you when I show you the trade that I took today. Because this video is just a trade recap. I'm just trying to explain my strategy a little bit. How I trade the volume profile. A lot of traders who do use it like to trade the point of control, where the most transactions occurred at during whatever whatever sessions you're using. Right now, I'm just using dynamic volume profile, right? So if I just scroll out, it takes out all the information that I have on the screen. But for this example, I'm just gonna use these sessions here, right? It doesn't really matter. So the way I trade is, instead of using the point of control, which you totally could use, and I know a lot of traders that do use it and have good success with it. But me personally, I just feel like price chops a lot around the point of control, and that's not ideal. That's not ideal. I want to know if I'm right or wrong almost immediately, right? Within the first couple minutes of being in a trade. I want to know if I'm on side or not, right? So how I trade is I use what they call the value area highs and lows, right? So you can't really see it here, but pretty much the value area, most people have it set to like 70% of the volume that occurred. Me personally, I actually use 40%. Just gives me better levels, gives me a better view of where the volume is and where it drops off, and that's kind of what I want to see. I mean, 70% does work, obviously. Traders use it, but I use 40%. And what I do is I trade the edges of the value area, right? So obviously you see this is it's a bell curve or bell shape, whatever. And what I would do, just for example purposes, is I would trade the edges of the value area. So I guess here, yeah, you see how volume kind of just dies off. That's what I like to see. I like to use that. And this is on a 30-minute chart, by the way. So that's usually what I use to get my levels. And I only use the regular trading hours. So I don't really look into Asia session or London or whatever. I just want to see what occurred during New York, and that's it, because that's where the most volume is occurring, is during the New York session. So what I do is I trade the edges. I would look to scalp. If I'm looking to short, I would look to scalp the value area high. If I'm looking to long, wait for price to engage the value area low, and um, and then scalp that. Right. So pretty simple. But to dive a little bit deeper on how I trade on a daily basis, is I use the session volume profile, and these indicators are all free. It's in indicators. So hold on, I'm sorry, 1 second. I don't know why that's off. Okay. So as you see here, we have the session volume profile. So this just gives me an idea, right? When I'm trying to get levels from prior sessions, right? This just makes it easier for me. I could do this myself with, a fixed range volume profile, but this just makes my life a lot easier, right? And then what I would do is, like I explained, I would take the prior session value area high, which is what these initials are, and then the value area low, and then I would use these levels to trade off of, right? And I usually wait I usually let the first 30 minutes go by before engaging in a trade. I just want to see where price is at, what price wants to do, what direction it wants to go, and that's a good way of figuring that out, right? So I have my levels here. So this is from today. Okay. All right. So price drops pretty sharply, right? And remember, I'm waiting for price to engage in the prior session, but sometimes it won't, right? Sometimes it won't engage in the prior session. So what I do, right, in the event, actually this is a perfect example, right? What I'll do is I will go left, and I will look for a session that price has not engaged with yet. So let's pull this up again. So if you look here, right, I like to call these fresh, a fresh session, right? Fresh session levels. Try saying that 4 times fast. And yeah, so pretty much this is when this session has been untouched, right? This value area has not been touched by price. What happened here was that price gapped up. This was last week. Price gapped up, and then it just kept going. It just kept going. It never came back down. Well, it did eventually, but it never came back and retested this session, right? Not saying that price needs to all the time, but usually you do see it. You do see a lot of these sessions at least get retested once before continuing, right? So I saw that. I marked these levels out, so that's why it says FVH, right? So fresh value area high, and then fresh value area low, right? So that's what I did. So we don't need this. I like to keep my charts clean, right? So this is the first 30 minutes. Let's go down. Let's see what price does. So back in the day, like 3 months ago, 2 months ago, I would just usually put my limit, right? I would put my limit orders here to buy on the level, and then I would usually use like a 15 to 20 point stop, whatever, and then I would go for. I used to go on like 3, 4, 5 hours. So this would have worked, honestly. This would have worked. It ran 50 points, but that's not how I trade anymore. So of course I'm showing an example where it does work because it does. And if you're risk adverse, if you don't risk a lot per trade, then that's perfect, right? If you risk 100, 200 bucks, maybe, then that's perfect. But I don't. I risk a lot more. I like to risk 500, 600 bucks, right? Um, so obviously taking a $500, $600 loss off the rip to start your day, if this didn't work, right? If it just kept going through the level, right? No confirmation whatsoever, then yeah, it's kind of annoying. And when that only works 20, 30% of the time, yeah, it gets frustrating. So um, obviously I didn't take this, right? I would wait for price. And what I did not explain this, and I probably should have. See, this is why I'm not a YouTuber. I didn't even explain it. Holy shit. What I've revamped my strategy with, instead of just waiting for, instead of setting my limits there, what I would do is, right, price is in the middle, and then let's say price is leaning towards the value area high, right? So I'm obviously looking for shorts. Instead of just setting my limits at the value area high, what I would do is I would wait for a sweep, right? And what I consider a sweep, a lot of people um, have sweeps a little bit differently. What I've learned and what I consider a sweep is a full candle closure over the level, right? So this is like a fake out, right? Like, oh, price is breaking out. Look, it closed over the level. And then what I would look for is for price to immediately, very sharp, aggressive V shape back down and close under this candle's body. And then we call that an order block. So that's what I'm waiting for. That is my confirmation. And then from there, you would put your limits at the order block, the last up close or down close candle. If you're longing, then the last down close candle, right? At the value area low, value area high, you're looking for the last bulky up close candle, right? You want it to be sharp and aggressive, fast, sharp, aggressive. You set your limits at that last up close candle, and then you target at the other value area, the other side of the value area, so value area low, or the liquidity, or just static 1.5 to 2R, right? 3R, whatever. But you want to keep it consistent. So, like for example purposes, this would be my order block, right? And then I would take yada yada yada, boom, and then target down here, 3R. I'd probably just take it to wherever the nearest liquidity is, and then go on with my day and enjoy my life, right? Instead of having to manage, a 5R trade, right? I just don't feel like doing that anymore. So that's why I'm documenting my journey here. So that's what I'm looking for here, right? Obviously, price, you get engagement, right, at the value area high. But remember, usually you don't want to long at a value area high. You want to long at a value area low, right? That's the best area to get longs. You don't want to necessarily. I mean, it can work, obviously, but you see all this choppiness, you see all this indecision. I noticed that immediately, and I was like, I think this is going to continue lower. Which, if you give it a second, right? So it sweeps again, but didn't close under, right? And usually I get my confirmations from the 3 minute, 2 minute, or 1 minute, right? I want to see a bulky candle closure under, and then an immediate swing back up. The reason I say this is because I'm sure you guys heard this quote before. You want to be on the right side of the V. And that was my dilemma. That was my issue, right? That was my issue, right? Is that I would have my level, let's say here. Oh my God, I'm sorry. What the fuck? Yeah, sure. My level would be here, and I would put my limit order, say, on the level, right? And then I would take all this drawdown. Sometimes it would stop me out, right? Depending on how big my stop is. Remember, I was going for large, like 3, 4, 5R trades. So I kind of just put my stop loss. I kind of just guessed, right? Wherever, like 10, 15 points. I don't know. Like you don't know what price is going to do. So I needed more confirmation, and that's what we're doing here. That example I showed you with the order blocks is that we're waiting for this V to form. We want to see that sharp, aggressive move back up, And that's what we're doing. We're getting on the right side of the V. And then once that candle closes over the order block, that's when you would take the long. You want to be longing or shorting, right? So right side of the A, I guess, or right side of the V, whatever. If you're shorting, it would be an A. You want price to already be going in your direction, and then you want to join for the ride. You don't need to make it in this game. You do not need to top tick or bottom tick. You don't need to be you don't need to be right. You just need to be we're here to make money, right? So once I started doing that, once I started being patient, letting confirmation develop, I started to see a lot more wins. I started to see my win rate go up a lot, a lot. Um, so yeah, that's why I kind of want to document it, because once I get my psychology down, it's gonna be um, it's gonna be great. So like I said, didn't love that the candle didn't close under, so I didn't take this, right. And as you see, there wasn't really any convincing movements going on, right. And at this point, since I didn't see a sharp reversal come, I wanted to see this value area get get engaged. So let's see when it comes down. So finally, you see this drive, right? You see this drive. Obviously, I'm on the 3 minute right now, right? I would have to wait for it to come all the way back up here before I could long. So I'm gonna drop down to 1 minute and see what we're working with. So now you see an aggressive move down. It sweeps level, and then now you see an aggressive move back up immediately, right? Sweeps it. Doesn't just wick it. It goes right through, closes under, and then comes right back up. So this last down close candle, before it makes its aggressive move back up, ideally that would have been your entry. But what I didn't love, and this is just me being honest because I'm recapping my trade, right? I didn't like how far it went down. So I wanted to see it retest this order block first. So in a perfect world, if I wasn't being, an idiot, right? If I just executed the way I should have, I would have put my limit order at the last order block, and then target the value area high that we discussed earlier, right? Which obviously is 4R. You're risking 7 points to get 35 points. That's pretty damn good. But that's not what I'm doing. I'm just looking for 2R. I'm looking for 1.5 to 2R. I'm just looking for in and out trades, and then to move on with my day. I want to be in and out of a trade within like 10 minutes, honestly, or 15 minutes. Like I don't want to manage it for hours on end, right? So what I did was I waited for price to engage, right? I see that this level is starting to work, right? I see that this value area low, people are participating. Like that's a great reaction from the order block, which I should have taken, but I didn't. So what I did was I waited for price. You'll see in this next candle. I waited for price to close over this order block, and what we call this is a continuation block. We call that a continuation block, right? The next down close candle that engages with the initial order block is a continuation block. So from there, I see obviously this is some great confirmation, but I'm not going to enter up here. I mean, you could, it's 20 points. That's not that bad. But what I did was I just left my limits at the continuation block, like I just said, right? And then I think I just did like 10 points or something like that. I mean, you could, honestly, now that I think about it, I could have just had my stop under this continuation block, but whatever, 5 points, like, I don't know, NQ can be crazy sometimes. So I think I just did 10 points. Yeah. So I waited, I know it took, yeah. So I see prices coming back down. I put my limit order at this order block, right at the value area low. It tags me in, and I'm pretty sure I did. Yeah, I just did 20 points. So it was just a regular 2R trade. I wanted to be in and out. And ironically enough, great reaction, which is what I like to see. But ironically enough, this took forever. Dude, it just chopped, and I was like, you got to be kidding me. But stayed the course, didn't move my stops or nothing. And finally, it tagged me out for my 2R, and I got out of there. Now, I'm going to show you where it went after. So it kept going. It hit the value area high level. So that's how I used to trade this. Is I would just hold until it hit the opposite end. But I'm not doing that anymore. And then let me see. Yeah, and then a decent reaction here, but whatever. That's besides the point. So the main play that I took today was that 20 point play. And then I got in, got out, let the trade do its thing. And yeah, that was the trade I took. Whatever, I got the executions here. So yeah, that's pretty much it. So hope you enjoyed this. Maybe eventually I will dive a little bit deeper on the actual strategy rather than just recapping the trades that I took. I want to. I think the best way to become a successful trader is to make sure your strategy is so simple, like foolproof. You know what I mean? Like it has to be so simple. You have to be able to explain it in like a couple sentences, right? Like the easier your trading strategy is, the more successful you'll be, in my opinion. You don't need a bunch of indicators. You don't need a bunch of squiggly lines and bullshit, whatever. You just need to have something that's consistent, something that is repeatable, mechanical, and I think that's what I have here. And I mean, like I said, I've done so much. I've done years of back testing. I've been trading this for a while. It's been working. Um, the only thing, any strategy can work, and I mean, I'm literally an example of this. It can work, but it won't work if your psychology isn't there. You know, my rules is that I take one trade if it's a win, then I stop trading, obviously, and if I lose, then I can take one more, but it has to follow the exact rules. If I take 2 losses in a day, I lock my accounts out and I'm done for the day. I walk away. Then I was offsides and I have to accept that. That's it. There's no exception, right? So no more than 2 trades a day and that's it. So I have to be very particular. I have to act like a sniper, right? Um, I have to pick and choose which trades are A plus setups, and I have to leave those C, D setups away, right? And that's what I was doing when I was tilting. I was just taking anything I saw. I was taking any order block I saw, and I was getting stopped out immediately. So this is why I'm doing this. Yeah, and I appreciate you tuning in, and if you've made it this far, I appreciate it. I'll see you next time. Happy New Year.